Another day, another story. Welcome to the ultimate guide on buying a business. We've scoured the internet to bring you the best video on the topic. With expert tips and valuable insights, this video is a must-watch for anyone considering purchasing a business. So sit back, relax, and get ready to learn everything you need to know about making a smart and successful business purchase. Business ideas. Technology and software. Companies that develop and sell software products and services often have high profit margins and have been growing rapidly in recent years. Healthcare. Businesses in the healthcare sector, such as hospitals, clinics, and medical supply companies, can be highly profitable due to the growing demand for healthcare services. E-commerce. Online retail businesses, particularly those that leverage niche markets, can be highly profitable due to the low overhead costs and the ability to reach a large audience through digital channels. Consulting. Businesses that provide professional consulting services in fields such as finance, marketing, and technology can be highly profitable, as they can charge high rates for their expertise. Service-based business. Businesses that provide services such as home repair, cleaning, or personal care services can be profitable as they have a high demand and doesn't require significant investment. There are several ways to find businesses to buy, including 1. Business brokers. These professionals specialize in connecting buyers and sellers of businesses. They often have a wide variety of businesses for sale and can help you find one that matches your criteria. 2. Online marketplaces. Websites such as BizBuySell and BusinessesForSale.com list a large number of businesses for sale. You can search for businesses by industry, location, and other criteria. 3. Networking. Talk to people in your industry or local business community. They may know of businesses that are for sale or may know someone who is looking to sell. 4. Directly approaching business owners. Look for businesses that you are interested in and reach out to the owners directly to inquire about their interest in selling. 5. Business appraisal firm. They have a detailed understanding of the market and have contacts and information that can help you find suitable business to buy. It is important to conduct proper due diligence and research on any business you are considering buying, regardless of how you find it. Best online websites to buy business. 1. BizBuySell Canada. This platform lists businesses for sale across Canada and allows you to search for businesses by industry, location, and other criteria. 2. BusinessesForSale.com. This is a global platform that lists businesses for sale in Canada and allows you to search by industry, location, and other criteria. 3. Kijiji Business. This platform is part of the popular classified website Kijiji and lists businesses for sale in Canada. 4. Canadian Business for Sale. This is a platform specifically dedicated to Canadian businesses, where you can search businesses by industry, location, and other criteria. 5. MergerNetwork.com is a platform with a large selection of Canadian businesses for sale, along with global businesses. 6. Dealstream.com, formerly BizQuest, another platform where you can find a wide range of Canadian businesses for sale, along with global businesses. 7. BusinessExchange.ca. 8. FranchiseCanada.com. 9. TheBusinessSellers.ca. 10. SunbeltCanada.com. 11. BusinessOpportunities.ca. 11. BusinessSellCanada.com. 12. RealEstatesandBusiness.com. 13. BuySellBusiness.ca. 14. BusinessMart.com. 15. BusinessBuySell.ca. 16. CanadianBusinessOpportunities.com. When evaluating a business to buy, there are several key factors to consider. Financials. Review the business's financial statements, including income statements, balance sheets, and cash flow statements, to get a sense of the business's profitability and financial health. Market and industry. Evaluate the market conditions and trends in the industry in which the business operates, to understand the growth prospects and potential challenges of the business. Products and services. Understand the products or services offered by the business and its position in the market. This includes the target audience, competitors, and growth potential. Operations and management. Review the current management team, operations and infrastructure, to see how well the business is run and identify any areas that may need improvement. Legal and compliance. Make sure the business is in compliance with all relevant laws and regulations and the seller have all the necessary documentation to transfer ownership of the business. Reputation and brand. Look at the business's reputation in the industry and among customers, as well as the strength of its brand. When buying directly from a seller, you should ask for and review the following documents: financial statements and tax returns for the past several years, business licenses and permits, leases or other agreements related to the business's location and operations, contracts and agreements with suppliers, customers, and employees, insurance policies, any legal documents related to the business, such as lawsuits or patents. Agreements and documentations related to the transfer of ownership. It is important to note that while the above list covers many of the key factors to consider and paperwork to ask for, it is not exhaustive. Depending on the type of business and the specific situation, there may be other important factors to consider and additional paperwork to review. Additionally, it's recommended to seek professional advice from a business appraiser, an attorney, a CPA or a business broker when evaluating a business to buy. When evaluating a business to buy, it is important to also have a plan for after the purchase. Consider the following aspects. Potential growth. Look at the potential for future growth, such as expansion opportunities and untapped markets. Synergies. See if there are any synergies or ways that the business can be integrated or enhanced to increase the value. Valuation. Determine a fair purchase price for the business, based on a thorough analysis of the financials and other factors, and compare it with industry standards. It is also crucial to conduct due diligence to ensure that the business is operating legally and ethically, as well as to identify any potential risks or liabilities. Additionally, make sure to review the following documentation. Sales and marketing materials, to understand how the business is promoted and marketed. Customer lists and contact information. Employee handbooks, agreements, and other HR-related documents. Any other documents that are relevant to the specific business you are evaluating. It's also important to meet with key employees, customers and suppliers, to get an idea of their level of satisfaction and their perspective on the business. Finally, it is important to remember that buying a business is a big decision and you should take the time to thoroughly evaluate all aspects of the business before proceeding with a purchase. It may be beneficial to work with a team of advisors such as an attorney, a CPA or a business broker, to help you navigate the process and ensure that you make a well-informed decision. Getting a loan to buy a business can be a complex process, but there are several options that can be considered. SBA loans. The Small Business Administration, SBA, offers several loan programs that can be used to purchase a business, such as the SBA 7(a) loan. These loans usually have a longer repayment term, lower interest rates and more flexible requirements than other types of loans. Conventional bank loans. You can also approach a conventional bank to obtain a business loan. This can be a good option if your business has a good credit history, profitable, and has a good amount of cash flow. Seller financing. This option allows the buyer to purchase the business with little or no money down by having the seller provide the financing for the purchase. Crowdfunding. By using this option, small business owners can solicit funds from a large pool of investors, this way making it possible to get a large amount of investment. Venture capital. Venture capital firms invest in early-stage companies with high growth potential. They may be willing to provide the funds for the purchase in exchange for a share of the ownership in the business. Business credit cards. Some business credit cards offer cash advance feature. This feature allows business owners to get a lump sum of cash which can be used for multiple business purposes such as buying a business. It is important to note that each of these options may have different requirements, terms, and qualifications, and not all businesses or borrowers will qualify. Additionally, it's important to have a solid business plan and financial projections to demonstrate the viability of the business you're planning to purchase, before applying for a loan. It's always recommended to consult a financial advisor or business lawyer who can help you navigate the options that are best suited for your needs. Get loan on buying business, no money down. There are a few ways to potentially get a loan to buy a business with no money down, including 1. SBA loans. The Small Business Administration, SBA, offers several loan programs that can be used to purchase a business. Some of these programs, such as the SBA 7(a) loan, allow for no money down, but they typically require collateral, such as real estate or equipment, and a personal guarantee from the borrower. 2. Seller financing. In some cases, the seller of the business may be willing to provide financing for the purchase. This is known as seller financing and can allow the buyer to purchase the business with little or no money down. 3. Partnering with an investor. Another option could be finding an investor who is willing to provide the funds for the purchase in exchange for a share of the ownership in the business. 4. Crowdfunding. With crowdfunding, small business owners can solicit funds from a large pool of investors. It allows people to invest small amount on your business plans and make it possible to get a large amount of investment. 5. Business credit cards. Some business credit cards offer cash advance feature. This feature allows business owners to get a lump sum of cash which can be used for multiple business purposes such as buying a business. The best part of using this feature is that the interest rate is lower than personal loans. It is important to note that each of these options may have different requirements, terms, and qualifications, and not all businesses or borrowers will qualify. It's recommended to consult a financial advisor or business lawyer who can help you navigate the options that are best suited for your needs. 6. Lease to own. Some business owners may be willing to structure the purchase of the business as a lease to own arrangement. Under this arrangement, the buyer would lease the business for a set period of time, and then have the option to purchase the business at the end of the lease term. 7. Rollover for business startups, ROBS. A ROBS is a way for individuals to use their retirement funds to purchase a business without incurring taxes or penalties. Under a ROBS, an individual can roll over their retirement funds into a new or existing 401k plan and then use those funds to purchase a business. 8. Community Development Financial Institutions, CDFI. CDFIs are nonprofit organizations that provide financial services and loans to underserved communities. They may be able to provide financing for business purchases, including those that require no money down. 9. Hard money loans. This type of loan are secured by real estate, and will use the property as collateral. This type of loans are more expensive than traditional loans, but they offer fast approval process and less restrictive requirements. 10. Another potential way to get a loan to buy a business with no money down is through the use of a co-signer. A co-signer is someone who will agree to take on some of the risk of the loan by co-signing the loan agreement and promising to make the loan payments if the primary borrower is unable to do so. Having a co-signer with good credit and a stable income can increase your chances of getting a loan, even if you don't have any money to put down. The co-signer's assets and income may be used as collateral for the loan, and the lender may be more willing to approve the loan based on the co-signer's creditworthiness. However, it's important to note that getting a loan with a co-signer is not a guarantee. Lenders will still assess the risk and creditworthiness of the primary borrower and co-signer, and may still require collateral and/or a personal guarantee. Additionally, the co-signer will be taking on a significant level of risk by co-signing the loan, so it is important to have a detailed conversation and agreement with them before proceeding. Also, it is important to keep in mind that having a co-signer could be a great support for you to get approved for the loan, but it doesn't change the fact that buying a business is a big decision, and you should not rush into it without doing your due diligence and being aware of the risks and challenges that might arise. 11. One more potential way to get a loan to buy a business with no money down is by using a business line of credit. A business line of credit is a type of loan that allows a business to borrow money as needed, up to a certain limit, and make payments only on the amount borrowed. Business lines of credit typically have a revolving credit limit, meaning that as the business pays off its debt, the credit line becomes available again. A business line of credit can be a useful tool for buying a business with no money down, as the business owner can draw from the credit line to make the purchase, and then make payments on the borrowed amount over time. Additionally, some line of credit loan providers don't require collateral for the loan. However, the interest rate is usually high and the credit line is short-term. Also, it's important to note that getting a business line of credit may be difficult for startups or new businesses with no credit history or low credit scores, and that the lender may require financial statements, tax returns, and other documentation to approve the loan. As with other loan options, it's always recommended to consult a financial advisor or business lawyer who can help you navigate the options that are best suited for your needs and provide you with the best loan terms. 12. Another potential way to get a loan to buy a business with no money down is by using an equipment financing. This type of loan is used to finance the purchase of specific equipment or machinery that is essential for running the business. These types of loans are typically secured by the equipment itself, so they may be more accessible to businesses that don't have other forms of collateral or a strong credit history. When you're using this kind of financing, the lender or bank will look at the equipment as the collateral, and the lender will take a lien on the equipment. This means that the lender has the right to take possession of the equipment if the loan is not repaid. Another benefit of equipment financing is that the loan is typically for a short term and for a specific purpose, which is buying the equipment. This can make it less risky for the lender and thus may have more flexible requirements and lower interest rates. However, it's important to note that equipment financing is a specialized type of loan and not all lenders offer this option. Also, this type of financing may not be suitable for all types of businesses or equipment. It's recommended to talk to a financial advisor or equipment financing specialist to determine if this type of financing is the right fit for your business needs. I'd like to add that before you start looking for loans to buy a business with no money down, it's important to have a solid business plan and financial projections that demonstrate the viability of the business you're planning to purchase. This will be important not just for getting a loan, but also for running the business in the long term. It is also important to note that even if you're able to get a loan with no money down, you will likely still be required to provide some form of collateral and/or personal guarantee to secure the loan. Additionally, many of the options for no money down loans may come with higher interest rates, longer repayment terms, or other conditions that need to be taken into account when comparing loan options. Finally, it's important to remember that buying a business is a big decision, and you should not rush into it without doing your due diligence. Make sure you thoroughly research the business you're planning to buy, and have a clear understanding of the risks and rewards involved. It would be also a good idea to have legal advice as well as accounting advice, especially if you have no experience in running a business. Another important point to consider when buying a business is the state of the industry it is in, and how the current market conditions may affect the business in the future. This includes researching the industry's growth trends, the competition, and any potential changes or disruptions that could impact the business. In addition to research and due diligence, it's also important to have a clear idea of your goals and objectives for the business, and to have a plan in place for how you will manage and grow the business once you've acquired it. This may include hiring a management team, developing marketing and sales strategies, and implementing operational improvements. When evaluating a business, you should consider both the financial and the intrinsic aspects. Financial aspects include the net profit, return on investment, cash flow, and other financial ratios, while intrinsic aspects include the business reputation, history, customer base, employees, and future potential. As you go through the process of buying a business, it's important to work with experienced professionals, including accountants, attorneys, and business brokers, to help you navigate the process and make informed decisions. Finally, it is also important to remember that buying a business with no money down will likely come with a higher level of risk than buying a business with a down payment. Be aware that the risk level might be too high for you, and that you should be prepared for the risks associated with this type of loan structure. Thanks for watching our video on buying a business. We hope you found it informative and helpful in your journey to becoming a business owner. Remember to do your research, consult with experts, and make sure to fully understand the financials before making any decisions. We wish you all the best in your business endeavors. Goodbye.